Hi, it's Jodi here from Northwest Accountancy. Today's session is all around pricing. So I wanted to talk pricing in a couple of different levels. The first being pricing of individual products, and then the second being pricing as in your whole business and what prices you need to set so that you can have all of the income covering all of the costs that you need to spend out every week, fortnight, month, however you want to do your numbers, quarterly or even annually, so that you've got a break-even figure to aim towards. So if that might be a little bit easier for you if you have a multiple range of services or a multiple range of products that are all different prices, then a break-even amount or a minimum income amount might be a lot easier for you to calculate than individual pricing. Okay, so let's get started first on individual pricing. So a couple of things you need to factor into individual pricing is, first of all, the cost of that product. So I'll talk about products, but products can also be services as well. So if you're driving out to clean somebody's pool, or if you're preparing a tax return, or if you're cleaning an aircon, for example. So all of those things are products. If you have, and this is definitely something to think about, if you've got a set price for those things. If you're charging on an hourly rate, I'd really like you to consider or ask yourself why, because you generally know what that value is worth for your customer, and then you can set your targets and your prices around what that is and make sure that you're operating in the right space for your business. Okay, moving back, a product price. So a product price is really, it has to cover not just the cost for you to buy it, so whether that's a physical invoiced amount or labor, plus superannuation to deliver that product. It also needs to help cover the overheads of your business as well. So when we're talking about price for a product, you need to really understand how many products are you going to sell, and how many of those then, when you sell them, get to that point of being able to cover your overheads. Now, your overheads are your costs, plus your taxes, plus an amount to pay the business owner and make sure that they're receiving pay for doing the work in the business, but also profit as well. So making sure that not only does your product cover its own cost, but it makes enough to contribute to the business and makes enough to add a little bit more, and it might be 1 or 2 cents or $1 or $2 or $10 or $15 or a couple of $100, depending on how much your product is priced at. But you always want to think about building profit in to a product price, otherwise there's no point being in business. So remember that product has a direct cost, generally the cost of producing it or selling it. It has an overhead cost that it needs to cover, your owner's pay, taxes, and profit. So every single thing you sell needs to take all of those things into consideration. So we're talking product-based. So we can then work out your overheads based on an hourly rate or based on a unit rate. And the bigger your business is and the more products you have, this is really quite difficult to go really, really granular and calculate exactly dollars and cents. Now, as an accountant, you'd think I'd be really good at that, but I'm not. I like the big high-level stuff. So here's what I'm going to teach you around the high-level stuff, and I'll share my screen and show you. Okay. So this, I'm just going to make it bigger. Here we go. So this is what I call the break-even calculator. So the break-even calculator shows you the amount of money that's required to cover your costs every single month. So then if you've got $200 products and $2,000 products, it doesn't matter what ratio of these. You just need to think in respect of, I need to sell enough to get this amount of income in, so that then I can then I can cover all of my costs. So remember those costs I just talked about. So if your business has loans, now loans being typical bank loans or vehicle loans or anything like that. I also am talking about if you've got ATO debt. So technically think of that as a loan and you do need to pay it back, or outstanding accounts with people. So if you've got a whole load of bills that you haven't paid, you've been adding them all up and not paying them, then count them as loan repayments as well. So we need to figure out over what period of time you can afford to pay those out, and you want to pay those out so that we can get an income target for you. So in my business, I've got no loans, which is absolutely amazing. So we'll stick with 0 for that one. The next one is your operating expenses. So these are all the costs incurred in operating your business. So things like rent, if you're renting a venue, electricity, telephone, internet, it will include your wages as well. So anything you're paying for staff wages, not owners pay, just staff wages. Anything, subscriptions, memberships, insurance, the whole lot. So all of those, you'll need to add them up. And whatever that number is for your business, type that into the break-even calculator. And then we've got your owner's pay. So your owner's pay is how much the owner will pay or will be paid as a result of the work that they do in the business. So you want to make sure that what you're paying yourself is similar, fair, reasonable, or more. You can pay yourself more than what a ordinary job in this sort of industry, so somebody else paying you to do the same job. So if your industry would pay you normally a salary of $70,000, you really don't want to pay anything less than a $70,000 salary to yourself. There's no point ripping yourself off. Let's make your business pay you a good wage. So these figures here are monthly figures. So $6,904 per month. I will just make that $7,500 a month. And then we've got your average GST to pay. So these calculators going to not automatically do it for me, which is fine. I will get yours to do that automatically. So this calculator is not working right now. I thought I'd tested it before. I should have tested it before I hopped on the video. That's okay. So what we've got is it totaling through and making calculations and assumptions for you. So the income that we need is that plus that plus that. And I've put a circular formula in there, so that's what's good. Oh, yeah, okay. So what we're doing is we're going through, putting through what our costs are for our business. So every month, operating expenses, 65,000, total owners pay 7,500. Now GST, I incorrectly put a formula in that was breaking it. So what I've done here is made it so that you have to type this number in, but it's an estimate based on this number here. So as we'll play with that, we will get that working. And then your income tax, if you're struggling with this one, just reach out and just let me know so I can do some quick tax calculations for you and for your business. So for this business, it's looking at an income of nearly 90,000 for the year, of which 10%, 90,000 per month, of which 10% is profit. So 8,966 times 12 months of the year. So we look at a profit of around $100,000. Now, it really depends on what type of business you're operating as, whether it's a company, a sole trader, or a trust or a partnership, as to how much tax you would pay on this. So it's really important to get the tax rates right, depending on the type of the business. Because as an individual, a sole trader, you pay a lot more tax at different rates than a company. At lower rates, at lower profits, you would pay lesser amount of tax. I'm going to work on the company tax rate here for this example and make it the 26%, which is for the 2021 financial year. So it's about $27,000 worth of tax for the whole year. And that's fine because you're earning $90,000 every month. Divide that by 12 to get a practical monthly figure, and so we'd want 2,331 as our tax figure. And you can see that by typing this number in here, it changes everything again. So when you want to make more money to cover the tax goes up. So I love being over conservative and going, okay, well, the 2,398 is $2,400, so let's make it $2,450 worth of tax that we'll put aside. And now our tax here is more than the tax that we will pay if we earn a 10% profit on our business. So I like to overestimate. And then same with this GST side of things. So it's now increased our income to $92,000 a month. And our GST should be $8,398, which is 1/11 of this total amount. So which means we need to put this figure here up to over $8,400. So 8,450, 8,424. So by playing around with the numbers, we know that if we've got operating expenses of $65,000 for the month, then in order to cover those operating expenses, to cover the owner's pay, to cover the GST, and to cover the income tax, so to cover all of those things, we actually need to bring in $93,000 worth of income every single month. So if you're freaking out and going, there's no way I can afford that, put your own numbers in. I've put that in the download so that you can access it. But it's a really interesting exercise to see, not only do you need to cover the actual product cost, so the cost of buying that thing, but you also need to cover all of the other costs within your business as well. So this works, funnily enough, works really well with Profit First, which is all of these different categories you need to cover. Now, what I haven't talked about is in this break-even calculator is what about your cost of goods sold? So if you're buying things to then on-sell to your customers, things like stock, such as air conditioners, if you're an air conditioning company, or books, if you're a bookseller, those sorts of things. If you're buying them, sticking them on the shelf and then waiting for somebody to come in and buy them, then that's a cost of goods sold. And the more you buy and sell of those things, the more those costs are going to be, but also the more your income is going to be. So you'll generally find that you've got an average percent based on the history of your business or based on your industry average. So you would buy things for $100 and be able to sell them for $150. So that markup then of $50 would be a markup, but it's not necessarily your cost of goods sold. So I want to show you that over here as well. So my price 100, sell price 150. When we look at it on a profit and loss statement, it's actually the other way around. So that's your revenue, and that's your cost of, I'm going to put COGS, cost of goods sold. So your profit, not yet, minus J14. So your profit or your gross profit, so your gross profit is the money that you have made off that one particular product. So you sold it for 150, but it cost you 100, so you've made 50. So that 50 divided by 150, so your gross profit percentage is 33%. Gross profit percentage, and your cost of goods sold percentage is 100 divided by the 150. Oops. Percent button. Right. So your cost of goods percentage here is 67%. So when I say you buy it for 100 and you're adding on $50, you're adding on 50% markup, but it's actually 67% cost of goods sold. So I just want you to remember that just because you're putting a markup on or adding a margin on top, it's actually not your cost of goods sold percentage. So make sure if you do have cost of goods sold, use this part of the calculator to run through and work out what your cost of goods percentage is. And you can do the same just looking at your profit and loss statement if you've got the right figures in the right spot. Okay, so moving back over here. So if my cost of goods sold is 67%, for every dollar that I sell, I'm only receiving 33 cents in profit or gross profit. And then I have to cover all of these costs as well. You can see the number increased significantly. So I would hesitate to add 50 bucks on, and I would add more on. Please add your prices up or increase your prices if that's your cost of goods percentage. What I like to see is around that the opposite way around. So the 35% cost of goods sold and the 60-odd% gross profit. So let's give that a go. So if it's 35% cost of goods sold, you're spending another $44,000 a month on top of the $83,000 to run the business. Now, remembering every time I play with these numbers, everything changes. So tax changes. So I need to put that figure out. I'm just going to put it up to 3,800 because I know what happens. And then this GST figure changes as well. So that's 13,000. And yet again, I've upped it. I haven't upped it enough. So 14,000 for tax and 4,000 for income tax. So it just keeps playing and playing and playing. So it's really tricky to work out exactly what your pricing needs to be until you've done what are your costs going to be. I'll make it a little bit prettier so that you can put your own numbers in for this break-even calculator. And I really hope that that was useful for you. Pricing's really, for a lot of people, it's really quite tricky. How much will people pay? What's it worth? And unless you're in an industry where you've got recommended retail prices for your stock, then you can set the price to whatever you need it to be based on how much you're going to sell and how much you're going to work. Good luck. And please reach out if you've got any questions or if the Excel spreadsheet's broken. Have a good day.